How much can you borrow with subsidized loans each year? Let's get straight to the facts about how much you can borrow with subsidized federal student loans each year. With the rising costs of education, many students are eager to know their borrowing limits. Just yesterday, the annual limits for federal direct subsidized loans were confirmed to remain unchanged for the 2025-06 academic year. This means undergraduate students can still borrow specific amounts each year based on their year, in school and dependency status. For first-year dependent undergraduates, the borrowing limit is $3,500 per year. Second-year dependent undergraduates can borrow up to $4,500 per year. For third-year and beyond dependent undergraduates, the limit increases to $5,500 per year. Independent undergraduates, or dependent students whose parents cannot borrow Parent Plus loans, have higher borrowing limits. First-year independent undergraduates can borrow $9,500, with up to $3,500 being subsidized. Second-year independent undergraduates can borrow $10,500, with up to $4,500 being subsidized. Third-year and beyond independent undergraduates can borrow $12,500, with up to $5,500 being subsidized. These limits apply only to direct subsidized loans, which are awarded based on financial need. Importantly, these loans do not accrue interest while you are in school at least half-time or during deferment periods. The recent One Big Beautiful Bill Act mainly affects Parent Plus loans and graduate student borrowing, not the annual limits for subsidized loans for undergraduates. Parent Plus loans are now capped at $20,000 per year per student, with a lifetime limit of $65,000 per student, starting July 2026. Graduate students no longer have access to unlimited Grad Plus loans and face new lifetime borrowing caps. However, these changes do not affect undergraduate subsidized loan limits. If you are planning to borrow for college, always check your school's financial aid office for the most accurate and up-to-date information. Subsidized loan limits are set by the federal government and are not changed by recent legislation unless specifically stated. The main changes in the new law are focused on repayment options and loan types for parents and graduate students, not annual subsidized loan amounts for undergraduates.